Hey, everybody. I'm your host, Brian Hunt, and welcome to another episode of Risk On, Risk Off. As we know, if you've been a following of the show of the past couple episodes, more than a few, I guess, so far, the underlying topic we'd like to try to cover is risk. And risk comes in many different facets and forms. Now, we maybe typically think about insurance as being the primary reason for risk. And, sometimes there's also the reason to explore a bit further because, sometimes weather can be a risk, as we've learned with climate change, and geopolitical things can be a risk. So, and over the years, that sort of concept of risk has kind of grown to be more of a situation where we're talking about enterprise risk management. And I think as people have probably who've been involved whatsoever, if in risk management or even involved in leadership of an organization or firm, risk can permeate throughout an organization. And as we've all kind of seen the past couple of years, something can happen on the other side of the fence or the other side of the planet, whether it be a pandemic breakout in China or war, or Russia's invasion of Ukraine. Things can have quickly sort of daisy chain back home, and as could have an impact to your operations and your bottom line. So the whole concept of risk, I think, has evolved over the years to be, and I would like to say, you argue back in the day, you might just have your insurance broker or agent buy you insurance, help you get insurance, take you to the country club, play golf once a year, and see you next year. I think that's really sort of changed, especially since the carriers have been taking more hits left and right, whether it be from property damages, as we've seen down in Houston, with millions of people and firms didn't have electricity for over 5 days or more, to cyber hacks, to supply chain disruptions, to active shooters, which we've even just seen recently with the potential recent attempt of assassination of former President Donald Trump. Risk comes in a lot of facets. And also being a entrepreneur can be one of the largest risks a person can take too. So I was really excited about having my next guest on the show because I've known Chris Moss for quite some time. He's definitely much a professional in respects to risk management and enterprise risk management and helping clients think strategically with respects to the risk programs, but also he's an entrepreneur in the sense he started his firm a couple of years ago and did the big risk that not everybody has the ability to do, is go start your own firm. So at this time, I'd like to add to the conversation my friend, Mr. Chris Moss. Chris, how are you, sir?
Hey, Brian, how are you? I'm great, thanks.
Good. It's good to see you again. And so, obviously very excited to have you on the show because I think you're definitely one of the more knowledgeable individuals I know when it comes to thinking about risk holistically. And you've seen it from all sides, which we want to get into your background a little bit. But Chris, before we go down that road, you're about my age, so you might catch this reference. If we're playing a modified game of where in the world is Carmen Sandiego, where in the world is Chris Moss today?
Well, today I'm at home in Frisco, Texas, where it is raining, but you're not wrong. I travel a lot. A lot of my friends and colleagues, they usually start by asking me that, where are you today?
And I definitely want to get into your travel towards the end because I think you've got some interesting stories to talk about. So Chris, are you from North Texas originally?
Not from North Texas, but I am a proud native Texan. I was born in Houston,
Okay.
and we moved around a lot when I was a kid. But I went to the University of North Texas in Denton, and I've been in the Dallas area ever since I went to college.
Well, it's funny you mentioned that and say Monday. I definitely want to talk about Houston. I want to talk about your opinions on what's going on down there later in the show. But yeah, but I'm curious, what attracted you to go to North Texas?
Well, it was a really good business school. It had and continues to have a really good reputation as a good business school, among other things. And it was reasonably close to home. I had really strong ties to my family back in East Texas, Longview, Marshall area, and I didn't want to stray too terribly far from home.
And I know over the years, North Texas has come out to I remember this is kind of a larger conversation we'll get into, but back in the day, 20, 30 years, there wasn't a lot of universities that actually had dedicated insurance programs. And I'm not sure if that was in place when you were there, but I definitely know North Texas now does have an insurance program in
place. That's right. And that's a really interesting point, right? Because when I went, I had no interest I didn't have a desire to have a career in insurance and risk management. Mm-hmm. And the University of North Texas did not have a insurance or risk management program in those days. Although I did take an insurance class and I got a B.
Hey, well, that's good.
Yeah.
So I guess.
Well, I mean, you learn, right? So
that's funny. So you go to North Texas, your business school, but you didn't have much of an insurance. I mean, I guess interest in insurance. But if I look at your, it looks like your first job out of school was working for State Farm. What led you to go to State Farm? What was sort of your impetus to try that out?
They were recruiting, right? So you
Okay.
get close to graduation and you start thinking about, well, God, what am I going to do with the rest of my life now? And I knew people who, from a very young age, in their teens, fairly early teens, knew what they wanted to do. That they
Yeah.
knew they were going to be a doctor, a lawyer, or a firefighter, or what have you. I had no idea. I thought I was going to go into computers, which is what my dad did. But
Yeah.
I worked for him for a little while, and sorry, Dad, I thought that was a little bit boring. And I looked around at what sort of careers and jobs were available at the time, and a lot of my peers were getting sales jobs, and I don't like selling. We can talk more about that in a while, since I'm an entrepreneur, right? I have
Yeah.
to sell, but I don't
Yeah.
enjoy selling. No,
Yeah.
some people do. I don't. I didn't
Not
want to do
easy.
that.
Not easy.
No. And so State Farm was recruiting, and I was like, well, Mom and Dad have State Farm insurance. They seem to like them and think they're a good company. So maybe I'll go interview for them. And it was for a claims adjuster position. And at the time, I had zero idea what a claims adjuster did. But nevertheless, I got the job. They were looking for people with a variety of backgrounds. They hired at the same cohort with me people who had communications degrees, who had education degrees. So they were looking for a broad stroke. But I think what sealed the deal for me was when I went in for my interview, the person from State Farm who was conducting the interview, just one person at the time,
Yeah.
she came running out and said, "Oh, they just told me that my car is parked in the wrong place and I might get towed. So they said to go to X garage. Can you show me where that garage is, or tell me where that garage is?" And I said, "Yeah, you do this, you do this." I said, "But why don't I just go with you and I'll show you and we can talk along the way."
Nice. Good customer service right there. That's I like it. So tell me, I mean, you spent, it looks like it's 6 years in claims and State Farm. So tell me, at least during your time there, what you came to appreciate or learn on the ground level with respects to claims and processing your claims.
Well, with respect to claims, I mean, a lot of it's the same over and over again. First, you start off handling vandalism and theft claims and very minor damage claims where there's no injuries. And then after a while, you're handling fatalities and injury claims. And, a lot of that is the garbage claims from, oh, I had $500 in damage to my bumper, but my neck hurts, and that kind of stuff. But you begin to realize that every case is different, and you have to conduct a thorough investigation of every case. You never know what fact or what piece of evidence or what piece of medical information is going to change the outcome of the claim.
Amen. Just take a second for everybody who's out there watching live. If you wish to submit a question or comment to Chris to bring to his attention, if you look at the lower right-hand corner, you're going to see a picture of me, and there's an oval next to it that says add a comment. Please go ahead and type your comment there, and I'll bring it to Chris's attention, as long as you keep it PG and clean. This is a family show, so let's keep it good. So, Chris, you obviously learned about State Farm. You're on the ground level for claims, and then that took you to Chubb. What was sort of the thought about going there?
Well, I left Chubb. I needed to change. I spent 2 years on State Farm's National Catastrophe Program, which was groundbreaking at the time, and now everybody has them. And I love that. That was part of the whole travel thing. I started going all over the country with a checkbook, and that was great. Delivering on the promise of insurance by paying claims. Literally, when you're there after a storm, days after a tornado has leveled someone's house, and you're there with a check. I mean, that was great. And I got to see parts of the country that I'll probably never have had a reason to go to. So that was phenomenal. But after a while, I just wanted more. I needed to do more. State Farm was going through a reorg at the time. And I didn't want to really wait my turn to move up into management. And so I left Chubb. I left and moved over to Chubb, handling, more commercial claims. I didn't do a lot of commercial stuff at State Farm. So it's a night and day, right? Personal lines and commercial lines. And so that was a big change. And I specifically was in environmental claims. Talk about complex litigation. Asbestos exposures and toxic torts over multiple policy periods, sometimes decades. So it was much different.
So obviously, from going from retail, residential is one thing, going to the commercial. What was sort of the takeaways of what you learned about in the commercial world versus, say, retail?
Well, one thing is that people are people. When you're dealing with you're dealing with people at the end of the day, and the way people behave, both because of the way that claims are caused, sort of the actions that people take. It's the same sort of carelessness or maybe disregard, what underwriters might call a morale hazard, because they've got insurance for those things, so they don't worry about it too much. But I mean, obviously, when you're dealing with in businesses, you're usually dealing a lot more frequently with attorneys or other professionals who are less emotional or less passionate about things. But sometimes you still run into that.
So, Chris, you bring up a good point. That's always one thing I've always thought about the claims industry is what you just mentioned. A lot of times, especially in retail, household, individual, people bring in lawyers or even commercials. So these are you're taking a phone call or you're having a conversation with an attorney. And a lot of claims people don't necessarily have. I mean, they have maybe education and they're trained, but they're not legal scholars, so they're not trained to be attorneys. I always think that would be kind of daunting to try to go up against an attorney. I mean, how would you sort of explain that to the layperson?
Well, I mean, I think it's a variety of things, right? I mean, it depends on what your agenda is, and at the end of the day, what the underlying facts are what drives the whole matter, right? So if there's some sort of it runs the gamut, right? You have on one hand, you have individuals who, whether they're in a professional business person or not, who maybe has never had an insurance claim in their life that gets maybe legitimately denied, right? Maybe it's something that's just, it's not covered by that policy. But you know how people can be sometimes. They have maybe rose-colored glasses about the way that they think that their insurance program is supposed to operate.
Sure.
And they get incensed and they take that old, oh, I've paid my premiums on time for 20 years and you're going to deny the first claim I've ever made. And so they decide they get mad. And so they lawyer up. And that is a rational human response. But the underlying fact is that the person is ignorant of the real facts of the matter. And if they have a good attorney who will explain things to them and help them figure it out, but sometimes they just pull a trigger and go after it. Depends on the kind of attorney they hire, right? There's good and bad in every profession. There's good and bad insurance adjusters. There's good and bad insurance brokers. There's good and bad insurance consultants. And it depends on what their motive is. Are they trying to just overwhelm someone with with legal paperwork in an effort to try to get something out of the deal for their client? Or are they going to be professional and figure out what the real answer is?
Chris, you touched on a point that I definitely want to bring up later, and we're talking about what your firm does. But since you saw that experience, you kind of referenced it, I wanted to bring this up a little bit. What has been your experience in the sense that how many people truly don't understand, whether it be individuals or households or even companies, don't really understand what their insurance actually covers and doesn't cover?
I think that's really common.
Yeah.
I think the difference is people who do something about that.
Okay. Yeah.
I think that's the differentiator
Yeah.
is people who want to really understand what their policy covers and doesn't cover. How does it operate? Walk through some hypotheticals with us. What would be covered and what would not be covered. And the fact of the matter is that organizations face risks every day that were never contemplated to be covered by their current insurance program. Yeah. And sometimes it's novel and you just don't have something that's going to cover that. Sometimes things are covered because they're not excluded and the underwriter didn't intend to. So that's why I'm a big fan of, as I'm sure you are, all risk insurance coverage and those sorts of things. Less is more for the consumer. For my clients, I want as broad a cover as possible for the best price.
Yeah.
But it's the people who ask those questions. And one of my favorite type of client is the one who's not afraid to ask what they think are stupid questions. I think there's a lot of people, there's a lot of who's responsible for the insurance program if it's not a risk manager.
Yeah.
It's usually the CFO or the general counsel or someone with that kind of a title. And they don't have an insurance background and they've kind of been saddled with their insurance program. Yeah. And they don't know what is side A D&O cover. I don't really know what is that.
Yeah.
But sometimes people are afraid to ask. And I think it's just, come on, just ask the question. Let's have an honest conversation about it. And we won't think any less of you because those guys are doing things at a level I'll never get to. And I don't understand what they do, but I'm their insurance nerd.
Yeah, and I'll touch on that and move on, but and we'll talk about it later. Like, say I've come to learn, say you worked at State Farm, and State Farm is a model where they have agents, and agents aren't independent of the State Farm; they are selling the product.
That's right.
And so, like in that situation, like with my current situation, like I've know a little about insurance. I'm a dangerous, individual. Where I've actually found there are endorsements, heard about endorsements, asked about endorsements, and I've brought it to the attention of say my agent to get it added if they have it, but it was never brought to my attention. So that's something I want to touch back on that later. But there's a lot of people who don't necessarily understand the role of an agent or a broker and what they should be doing or not doing for you. But to that point, it's a nice segment because obviously you were a commercial broker carrier, and then you moved over to Charles Taylor. Tell us a little about your experience at Charles Taylor and what actually a firm like Charles Taylor does.
Well, you see the map behind me, that even more, right? I got to travel a whole lot more because Charles Taylor is based in London. And at age 30 or 32, whatever I was when I moved over there, I got to go to London for part of the interview process. That's
nice.
Somebody else paid for that. So that was really great.
Not bad.
But
not bad.
here's a company. I mean, Chubb is an international company, but I was only doing anything domestic, right? But here's a company that's genuinely global, had offices and people all over the planet, and was doing all kinds of different things. A relatively small organization doing a lot of different things that related to risk and insurance. The main thing that they used to do is manage one of the oldest mutual insurance companies for steamship owners, and they have one today in the U.S. for USL&H that they do. They handle high level claims, manage aviation claims, energy claims, so like well blowouts and refinery fires. Those big, massive, complicated claims that have lots, big numbers, big figures. Usually multiple insurers are involved. And that's the specialty sorts of things that Charles Taylor does. And it was great to have a relatively small organization with lots of different experts and specialists. They have engineers, they have lawyers, they have claims professionals, they have pilots, they have a naval architect. They have all sorts of professionals in that organization. So it was really a fun time.
And so, correct me if I'm wrong, Charles Taylor, it's a third party risk management service firm, correct? And
that's right.
Not selling insurance, but it's a third party management firm. Okay.
They provide insurances to both the consumers of and the sellers of insurance. They're fairly straightforward about that.
Okay, very good. And so obviously it seemed like you were there a long time. You were even the director of risk consulting here in Dallas. That's why I even got to meet you in my professional life when I was at my prior firm. That's why I got to learn about your role and what your firm is doing in the larger scheme, working with larger carriers and larger clients. But then I guess somewhere along the line, you must have got an itch to maybe take the big risk that few people can do, but start your own firm. I'm just kind of curious, what made you decide to go down that road?
So going back to my time at UNT, my declared major was entrepreneurship, small business management.
All right. So at least you had an inkling you wanted to be an entrepreneur.
My joke when I in those days was I wanted to I wanted to run my own small business, so I got a degree in that, and then I joined one of the biggest companies in the country. Doesn't make sense. Yeah. But you just go. Sometimes you go where your heart tells you to go. Where does your gut tell you to go, and that's what you do. And yeah, I started to get that feeling in my gut that there was time for a change. My former boss and mentor, Gabe Lugo, had passed away, and I took over running the organization because of that. I always wanted his job, but not in that way.
Yeah.
A lot of other people that I respected, admired in the organization retired or left the company. Joe Roach, if you're out there, he retired. And the company changed a lot. Some of the newer people that started to come in that were consulting firm type people. And I was under a lot of pressure to sell. And we already talked about that.
Yeah.
And I'm running reports and sitting in all these meetings, and I'm a full-time consultant for my clients, which is the part that I loved.
Yeah.
But I had all this pressure to sell and grow like massively, but I wasn't really being given the resources to do that either. So I wrote up a business plan and decided to do my own thing.
Awesome. Good for you. So tell us about Compass Risk Services. What do you guys do?
Well, we're independent risk management consultants. We're risk managers for hire. So we do everything that a high-level risk manager or a risk management department should be able to do. And that's everything from the boring stuff of managing dumb old stupid certificates of insurance, but they're important for some reason to many people. And so we can help manage all of that garbage, all the way up to delivering boardroom presentations on enterprise risk management and risk registers. Which happens to be my favorite thing to do. Our clients that want to do risk registers and think about what they can do to further mitigate their risk, that's the top end of it for me.
Yeah.
To help companies to be better. It's one thing to answer questions about an insurance program or handle claims, but it's something else entirely to diagnose issues that exist in an organization and help them to move the needle on their risk so that they can reduce frequency and severity of loss. That's our sort of our tagline at Compass Risk. We help you to minimize your total cost of risk, and we help you to reduce frequency and severity of loss.
All right, so I'm glad you brought up TCOR. So I'm gonna put that and make a note because I want you to come back and we'll address TCOR. That's kind of evolution of this conversation. So let's go back, 25 years. You're just starting in the industry. You're getting involved in the insurance world. How would you characterize the insurance world, say, and the larger concept of risk? How would you say it's evolved in the past 25 years, and how have you seen as far as whether or not it's been? I would argue, I don't want to put words in your mouth, maybe didn't give a lot of attention, maybe still doesn't from some organizations, but I think things have definitely evolved over the years, and things that go bump in the night happen a lot of times that we don't necessarily think about or know about.
Well, I'm happy to talk about how things have evolved and changed over time, but I'm going to start by telling you that the more things change, the more they stay the same.
Yeah.
And when I was at State Farm, I remember seeing an industry magazine in around 1996 that had that giant satellite photo of Hurricane Andrew over the entire peninsula of Florida, right?
Mm-hmm.
And it was the headline was "The Wake Up Call." Right. And the article talked about never again and how underwriters were going to have more discipline in not having too much of an aggregation of exposure on the coast. And this is the kind of thing it was unprecedented, and we're never going to let this happen before. Really? Really?
Yeah.
How many times have we seen this movie now?
Yeah.
Right, where the market gets back into and there's the coastal construction is busier than ever. Now things are changing because people are addressing the risks in some way by changing the construction techniques, but there's still a lot of old buildings out there that are, maybe subject to collapse.
Yeah.
Again, Beryl was a massive hurricane very early in the season. That took a different route that people didn't expect. It was expected to go across Mexico, and it ended up in Houston. So these are things that are difficult to predict, and are harbingers of an interesting hurricane season and more change to come, perhaps.
Amen. Just a reminder, if you're just new to the show and watching her live, if you wish to have a question or bring a topic to Chris Moss's attention, please look to the bottom right-hand corner. You can see a photo of me. Next, it says add a comment. Please go ahead and type in add a comment, your question, and I'll bring it to Chris's attention. And then, of course, please keep it clean.
If I knew where to point at the bubble, I'd point at the bubble, but I can't see it. So,
amen. So, Chris, you bring up a good point. And so I've been doing risk insurance for most of my professional life, in the sense that, I spent 13 years at FM Global, been, my current broker for 3 years, prior broker 5 years. And I spent time with a large general contractor in Dallas. So I think I've seen it from all different sides. And I approached my concept as far as when I came into risk. I was even started off as I got a first taste of the apple. I was doing forensic accounting and doing business interruption.
Oh, wow.
Time element claims on the back end once the thing had, once a claim had already occurred. And it was always very evident to me, like a lot of those firms, and this is say 20 years ago, dating myself, no one really had a concept as far as, or at least I would say, argue that many firms and organizations didn't ever think about the worst case scenario. It was just maybe place the insurance and move on, and focus on making clients and and profits, which is obviously the purpose of business. But things do go wrong, and there's the studies. You and I can talk about this all the time. The studies show, as far as those who have a sense of what can go wrong and have a plan for it, can survive it and can move on, versus those who don't and find themselves scrambling, like I think a lot of people did during the pandemic. I've talked about it as far as you and I both know that it was going to happen. It's a question of when, and we had a sense that people should plan for it, but most people still don't plan for things until it goes wrong. And that's not the time to build a plan. Do you think, as you've seen over the years, and maybe it's a question of, Katrina Rita, Sarbanes-Oxley, Harvey, whatever, more people, these firms are at least being cognizant of their risks, and at least trying to at least identify them? I don't want to put words in my mouth. I don't still think that risk management gets the proper resources it does.
No, it never does.
Yeah. And I think that's because it doesn't make a profit. But I would argue if it's done properly, it will save you from losing revenue.
Well, that's just it, right? You
Yeah.
have deductibles and self-insured retentions, right? And if
Mhm.
you have losses, then your premiums are likely to go up. If you avoid losses, your premiums are likely to go down.
Right.
But moreover than that, I mean, at the end of the day, I mean, insurance is great and it's a facilitator of commerce and it helps companies and organizations take risk, right? And that's what we all do. And probably, hopefully, everybody on this call, what you're involved in is helping to facilitate the risk taking of some organization, right? And risk equals rewards. So we all want the rewards, but you got to take risks and you have to take calculated risks. So the better that you are at mitigating those risks and making sure that you're operating in a safe manner, then the better the rewards are going to be on the other end. But insurance at the end of the day is a financial Band-Aid when something bad happens, right? And so if you have a loss that impacts your customers or your employees, and it's especially if you're a big enough organization for it to be in the news, and then you're having an impact that's beyond the immediate financial impact, right? You're impacting on your reputation. You're impacting upon the service delivery or the products that you deliver to your customers. You're having an impact on your employees and staff. You're having an impact on your suppliers. So those are things that if you think about holistically what a big loss might mean for your organization and the knock-on effects that it has, which is something people don't think about very often. And one more thing, Brian, I think it's important for people to stress test. It's important. It's one thing if you say, I'm good with my property retention at $1 million or $10 million or whatever it is, depending on the size of your organization. But are you okay with all those different retentions and deductibles? If you have a big loss, let's say you're a publicly traded company, let's say you're a chemical plant down on the coast of Texas somewhere, and you have a giant explosion. So now you've got you've blown through your retention and your waiting period on your BI. You've blown through, you've got people injured, third-party contractors or members of the public. Maybe you've got a pollution claim because of the plume. All those retentions are gone, right? And including work comp. And now you've also maybe got a hit to your stock price. And so maybe you've got a shareholder suit that follows as well. So you have to stress test these things to be sure you're okay with the aggregate of all of those deductibles and retentions.
Amen. So we got our first question. We're going to bring it to Mr. Moss's attention. So good afternoon, everyone. This is Jose Serrano. Coming out of COVID, we've seen businesses faced with so many challenges from staffing, supply chain, etc. Today, we're seeing a surge in fraud on the banking side. What's on your radar for 2025 as far as risks that you've keeping an eye on? I'll let you go first on that one, Chris.
Hey, Jose, how are you doing? Thanks for the question. So I would really like to know more about, I mean, I guess it's not surprising that I'd like to know more details about the fraud that you're seeing right now. If it's driven by, we always see an uptick in fraud when the economy is not doing well. The economy seems to be improving right now. I guess depending on who you ask, but the stock market is the S&P and the Dow is doing pretty well right now. And unemployment's been down, but yesterday or this morning, we saw that unemployment ticked back up. So we usually see an increase in fraud during poorer economic times. So I think for 2025, I'm with all these different things, we're still in the shadow of COVID. We're still seeing supply chain problems, although in my personal opinion, I think that's overblown. I think people are blaming it on those kinds of issues rather than taking ownership of fixing and solving the problems. Obviously, we've got an election coming up, and that always keeps people holding the purses. Check, Jose, thanks for clarifying. Check fraud. Yeah. I mean, it's when things aren't good, then people tend to, that type of crime goes up when the economy's not well. But I would say that, with COVID, we used to have a lot of dual income families, and I think with COVID made people reassess their lives a lot. And so now you have a lot more stay at home, one parent staying at home, or people aren't doing with dual incomes anymore. So I think maybe they're beginning to think maybe I need to go back to work. Maybe they can't find work. I'm not sure what's driving the check fraud specifically, but I do think that once we get past the election, and all these prognosticators are expecting the markets to just kind of bust loose. The stock market jumped up 2 days ago. Did you see that?
Yep.
And a lot of that is because people are expecting the Fed to reduce the reserve rate. They're just, they can taste it, right? It's so close, they can taste it. So I personally, I expect good things. I think what people don't like uncertainty, and the election represents a huge amount of uncertainty, and people are expecting the markets to pop. And I think once we get past the election and into 2025, I'm personally very bullish on that. I think that things are going to be good in 2025 overall.
Well, Chris, and Jose, thanks for bringing the question, because it brings up a topic that I've been mulling around, and I think Chris and I we're professionals. We can talk about this. This is our job. Our job is to think about the worst case and plan for the worst and hope for the best. And I've had the good fortune on this show of having a couple of New York Times best-selling authors talk about geopolitical risk or domestic risk. Tom Barnett, Tom Shakar, both who had recent books published, and then Juliet Katt, who I love. She's fantastic. She's a CNN analyst, professor at Harvard. She wrote a book about, I think, Chris, you haven't read her book, you should pick up a copy. So The Devil Never Sleeps. Basically referring to that the worst thing's going to happen and you got to be planned for it. And it's phenomenal. She was assistant director of Homeland Security. She was in charge. She was at Homeland Security for Massachusetts when the bombing occurred during the marathon. She's phenomenal. I think you should put her on your radar. But, and this has been in my head for recently, and this past weekend, unfortunately, it popped up. You mentioned the election. It's very tense. We're a very divided country. We're not, these aren't our fellow countrymen, but these are our enemies almost, now to the point. And when I was sitting there on my computer Saturday afternoon, I'm just kind of looking at Twitter. All of a sudden I see this thing about shots fired Trump.
Yeah.
And I immediately go to CNN.
Yeah.
I got to be honest, I wasn't surprised. I've been convinced someone's going to take a pop at either Trump or Biden. This is a question of, I mean, there's always plots in this, going for this, but they'll do the review as far as how it happened. I'm not surprised it happened. I am grateful he didn't die, because if he had died, I guarantee you the blood and riot in the streets that night. So that being the context, Chris, one of my favorite people is Ian Bremmer, and he puts as an annual report top risk. Earlier,
oh yeah,
the top risk was American political spectrum. And
well, he was right about that.
And I think
he's right about that, wasn't he?
So, Chris, from your perspective, I mean, our job is not everything we talk about is insurance, but there are now, violence and mass, mob protection you get for insurance. Chris, I mean, from dealing with your clients, and this, what is your sense as far as the next 4 or 5 months can be pretty tense, since there's a lot of things that still can happen. I mean, what are your sense on that?
I share that nervousness. And I think reasonable people are a bit nervous. Yeah. We talk about politics because politics has an impact on the economy, and it has an impact on everything. And so when we're I'm sure you experience this yourself, when we're talking with executives, they have a sixth sense because they're paying attention to what's going on in the world. Mm-hmm. And they understand how those things impact insurance companies too, because those executives are looking at the same set of facts as everyone else. Yeah. But I share the good thoughts. Regardless of your political affiliations, I don't wish harm on anyone, and I'm glad the former president is okay. But it was you were waiting for, like, what's next. I had a little feeling like, because we watched the events of January 6th, 2020 mm-hmm. on television, and you're just like, God, what's next? Or even back to 9/11, right? Because those things. We watch those things happen in sort of slow motion, and thank God that was a relatively contained event, but it could have roller coastered out of control by people beginning to fight in the crowd. And then that could have led to people having riots or fights in other parts of the country, particularly if his injuries had been more severe. Yeah. I think with respect to risk, I think the bigger question is, why did the Secret Service miss that guy over there? There's lots of evidence and reporting right now that he had been seen, that maybe they had been talking about him on the radio, and that some of the attendees had pointed him out to the police, and they had an opportunity to do something, and maybe they were too slow. But moreover, why wasn't that? I mean, that was within range, obviously. So why wasn't it secured? So there's a lot of unanswered questions there, and that certainly relates directly to risk.
No, amen. So maybe we kind of pivot a little something, a little lighter. I don't think lighter. So Chris, obviously, you both know the insurance markets have been pretty tough the past couple of years, especially on commercial property. And we sort of let's go back to Houston. Houston's been taken in the teeth recently. I mean, basically 2 major storms. One, the crazy one, the hurricane recent was one thing. But the one that hit in May, that was like, heavy rain that came in with all of a sudden these hurricane level winds, was just amazing. So once again, two issues where you got power outages, and you have high concentration people living on the coast. Now, one thing is you have existing buildings that might be already there. So companies might have to, rebuild, I say rebuild, but at least, fortify their current buildings to make them better roofing, better flood protection at facilities. Because, I make the joke, you may not believe in climate change, but it doesn't matter. Your insurance carrier does.
100%. Everybody, remember what Brian just said. You might not believe in it, but the insurance companies do.
Amen. And they've got the loss runs to show it. And so, and this is the key, that it's like, you show the migration that's occurring. All these people coming from other parts of the country, like going to Florida and Texas and for economic growth, whatever. But everybody wants to be on the beach. Everybody wants to be on the lake. Everybody wants to be on a river. Okay, fantastic. But that's also so you're more exposed to climate change. What is that dynamic when you're talking to clients, as far as like, okay, we want to go to Florida. Okay, but are you going to go on the coast? Or are you going to go inland? Because, sea levels rise, flooding occurs, hurricanes bring water further in. That's an issue. I mean, I can tell you, if you're a developer trying to get a project down on South Beach, good luck, unless you're going to pay for yourself. You're not going to get insurance. And then sort of higher deductibles. So what's your sense right now when you're talking to your clients, you're talking with carriers, as far as how would you summarize the current issue, especially like, commercial property insurance?
Tale of two cities, Brian. You have people who are very risk mitigation minded and thinking long term about the future and about the way things can be later on, trying to position themselves and their properties and their assets and their risks in the best possible way so that they can avoid those things and factor those in. And those are my favorite clients, because they want to do all the things for all the right reasons. And guess what? In the future, they're going to have fewer losses than the rest of us. They just will. It doesn't mean they're not going to have any losses. They certainly will. And there will be bad things that will happen to them, because bad things always happen. But they're going to be in a much better position than their colleagues, especially when underwriters start asking questions and qualifying risks and putting some risks in a no-go zone, right, by zip code. But then the other side of that coin is, let's live for today, man. I'm only worried about it right now. Things will be better next year. But the markets are cyclical, just like those underwriters who said after Andrew, never again, the wake-up call. Eventually, the rates, the hard market we're in now, those rates are going to get attractive, and they're going to bring new capital into the market. There'll be new insurers with a clean balance sheet who are going to go in and they're going to write those risks.
Yeah.
And so it's going to keep happening. This is a cycle that's going to keep happening. And that's why the claim side of my business will do well, because they'll continue to have to handle claims, right? Because of the people who didn't listen to the consulting risk on the front end.
Amen. So to that line, this is maybe kind of pivot for another risk that's been kind of, I think 7 years ago was emerging, but I think you deal with your clients is even probably more prominent now, is cyber. What is your sort of, when you're talking to your clients, what are their thoughts, what their experience been on cyber attacks? I mean, I would like to think by most time, most clients or firms out there realize they've got exposure, but still some are out there thinking they don't.
I think that unlike some of the other risks, especially the physical risks, most organizations, certainly in my experience, most organizations are taking cyber very seriously. They are doing what they need to do in order to shore everything up. They can see that, I think, because you're in your computer all day, every day. Most professionals these days are, and they understand that. The thing I wish people would learn to do is to write right, and to not put things in emails that they don't want the outside world to know. They always seem to find a way. Out there.
Yeah.
It's interesting. The cyber, I think, is an excellent example of how risk shifts over time, because when we started using computers and when we first started to experience hackers, and I think to this day, we still have an image in our head. When I say hacker, what image do you have in your head? Is it of a teenager in a hoodie in their mom and dad's basement? I think a lot of people, maybe it's our vintage, Brian, but I think a lot of people, that's the image they have in their head of a hacker, as some teenager, someone just somebody who's just shaking the handles, turning the handles to see if the door's open, right? But then it got worse than that, and now it's nation states.
Mm-hmm.
Now it's nation states looking to do whatever they can for whatever reason, and anyone and everyone's a target. The old adage today is they used to say that it's those who have been hacked and those who haven't been hacked yet. Today, it's those that have been hacked and then those that are going to get hacked again.
Yeah, that's true. Yeah, that is very, very true. And I think that's probably that cyber has been one of those lines where I think about, the old adage, is buy insurance and walk away. I mean, 7-8 years ago, cyber was starting to get rolled out. A lot of carriers, a lot of capacity. So I think the application was 2 pages, and you moved on. And you got cyber insurance, but then all these hacks kept on coming, and then so like the old adage, like the first guys over the fence get the spear in the chest, and so a lot of carriers came in. Yeah, we're gonna do cyber insurance. We'll get the money, and then they take it, and they go, okay, we're gonna this isn't working. They leave, and so the next second guys come along, which I think is the evolution of risk. Like I give it names like say the groups like At Bay, Coalition, Resilience, that are more like, okay, we're gonna bring the white hat hacker mentality. Mm-hmm. Yeah. We're going to proactively scan your networks, do a sanitary test, and then you got to fix these first, and then we're going to come back and scan you on a regular basis. And there's training. I think that's those sort of cares, kind of back to like highly protected risk from a property, but cyber I think is the same way too. You need to be more proactive and try to be in front of these attacks, waiting for it to come to you. And I think that's how a lot of the carriers are underwriting these days.
And in terms of being proactive, it's also in terms of training your staff. Amen. If you work for an organization that sends around monthly training and they teach you not to click on these things and it's annoying, that's what's going to save your company probably. Because Amen. You may not be the weakest link, but I guarantee you there's somebody in your organization who will click on that link because somebody always does.
Yep.
Every time they run those tests, they look to see how many people clicked on it. And there's always some percentage of the population who clicked on those links.
Yep.
They can be very convincing. And if you're a property person, if you're a casualty person, if cyber is something that you're not really all that familiar with, this is a great opportunity to get to know your cyber broker and to get to know your cyber underwriter. And you should invite them in with arms wide open. There are a lot of free or low cost tools or studies that they can help with you. And it's a great first step. I mean, they're usually, you could pejoratively say, it's worth what you pay for it. But it's a great first step, and your underwriter will appreciate the fact that you've invited them in and asked for their help in that, and that can deepen your relationship with that cyber insurer, and you might need that relationship if you have a loss.
Amen.
Or a difficult renewal.
Again, if you have a question for Chris Moss, look at the bottom right-hand corner. You see my photo. Next to it, there's an oval that says add a comment. Please submit your questions to Mr. Moss. I'll bring it to his attention. Chris, what's with the services that Compass Risk Services provides? I mean, first of all, you're not a broker. You're not selling insurance, correct? You're providing a consulting service as respects to risk. And so maybe you're the outside third-party risk management or just a consultant come in it. So you're not getting commissions on the backside of the care. So you have the ability to sort of just flat out tell it as you see it, right? Great.
That's right. We're completely agnostic who the broker or who the insurer is, as long as they're doing a good job and giving a good value. Yeah. That's what we seek. And who's the best broker, who's the best insurer? It all depends on a lot of different things, right? It depends on the team that's there. Yeah. If you're on the team, Brian, obviously I want you on my team. But it's who's on the team. Yeah. What business is it in? What industry is it in? What region is it in? Where are you playing? There's lots of different things that put that together. We do run some RFPs from time to time, and I would humbly suggest that we're a lot better at it than a company supply chain department is in running an RFP, because we know the kind of questions to ask and how to tee it up to get the relationship off to a good start if a company makes a change when they do an RFP.
Sure.
But we do. We do all kinds of things, right? We do little projects for people. Sometimes they just want us to help them with a small problem. Mm-hmm. Sometimes it's a claim. We had a hospital client call us in Kentucky 2 years ago, and their main hospital building burned down on Christmas morning because of some literally Christmas decorations had been left plugged in overnight, and they burned the place down. And their everything was documented, and their claim was paid in full. and very quickly, and they were very happy. So those things happen, and sometimes we're brought in to do some training and help people understand their risks, how to run risk registers, how to put them together, how to look at and treat your risks. Those are always a lot of fun.
So Chris,
everything.
Yeah. So being cognizant of time, I want to ask you this question. So if somebody's watching this live, or they're going to watch it later on the YouTube channel, and they're thinking about, man, maybe they're a CFO of a firm or CEO, and they're thinking about needing some help. What like you come in, or even like someone like say you don't bring in you, but this way, what would you say are the top three things or five things? If someone's like looking at their company, like brand new set of eyes, they're trying to get their hands around their risk profile, what would you say are maybe those 3 to 5 things that would be the ones that you say, man, you need to make a good look at this because it might come back and bite you?
One is if they're growing.
Okay.
Our best clients have always been clients that are in a growth mode, either because they're acquiring something, they're building something, they're moving into a new market. Maybe they're a US based company and they're starting to do some work overseas. Maybe they're launching a new product. Maybe they're an engine maker who's always made gasoline engines and now they're going to start making electric engines. That kind of change is number one. I think number two is that if you haven't looked, maybe you're a company that hasn't had any growth and you've just been kind of static for a long time. And maybe you've just been rocking along or rolling over and renewing your insurance with the same insurers year after year after year for a long time. It's probably time to take a look at, are the forms up to date? Are you getting the most broad cover? Has somebody snuck some new exclusions in on you? Mm-hmm. Things change. And even though on the face, it doesn't look like your operations have changed, it's time to have a look. And then the third is if you're having a lot of claims, maybe you have a lot of low level claims that are within your retention and you don't care because it's not reaching your insurance layer, right? But frequency breeds severity, and there's usually a reason for those, and they can normally be solved.
So, Chris, I have a question for you here I want to bring to your attention. And it's for some reason the technology is not allowing me to bring it up. I can see it on LinkedIn. Someone's posted.
Things change, Brian. Things change.
But it's not showing up on specifically what I'm showing here in front of you. And it
worked a minute ago. Why doesn't it?
Yeah, I don't know. It's showing the LinkedIn, but I'm trying. Emmett, if you're sitting here listening, I've got you. I hear you. Let me see if I can pull this up. And it's shoot. Emmett, if you're sitting or watching this, if you can repost that question, I'd love to try to get. I'm having a hard time pulling it up. But gentlemen, one thing it's the thing that sort of brought the sentiment, Chris, is that some people hate insurance. I mean, they kind of hate the whole process in the sense that they feel like the regulations require them to have it, but then you and I hear that story all the time. It didn't. My claim got denied. And I hear that, and it's a pain point where I get brought in to talk to someone because I've been buying insurance all this time, but when the actual claim occurs, it got denied. And so then the question that I guess, Chris, comes into, what is that level of penetration or analysis that goes back to your homeowner's policy? People buy insurance, but they don't necessarily know what they have. And then, okay, here it is. I'm actually going to pull it up right now. It's finally showing up. This is Emmett Coots, I know very well. And then Kemitz, full disclosure, is one of my clients, so hopefully this is not applying to me. I know a lot of people that hate insurance because they feel like insurance companies forcing you to have it through regulations. Say, if you're a certain state, you've got to have workers' comp, whatever the case may be. They don't pay adequately on claims. At the end of the day, it's still a business with a model to make money for the carriers. Okay, that's true. How do you navigate to ensure your clients are covered and take care of legitimate claims?
Emmett, that is a great question. And I think that's the frustration that a lot of companies are seeing now. Their claims are being denied more and more, or not being paid in full, or the insurance is not responding in the manner that you expected it to. I guess I was trained properly. So this is not an advertisement for State Farm or Chubb, and I haven't worked for them for a really long time. And although I will say, I think, Chubb is basically Ace with the Chubb nameplate on it, right? But I was trained. I mean, literally, I was trained that we're delivering on the promise of insurance. That is how I was trained as an adjuster. And that's why my personal lines are still with State Farm because of that reason. And they believe that. I will say that there's a dearth of talent in the industry, right? Mm-hmm. I think we all know
that's
that.
true. Yeah, that is absolutely true.
And especially in claims, whether it's the claims department of an insurance company or a TPA, there's a lot of young people out there, and God bless you, young people. You got a great career ahead of you, and you're going to learn some things. But sometimes younger people don't really know, and sometimes their staff is overwhelmed, and sometimes it's easier to just deny a claim, right?
Mm-hmm.
A soft denial, right? Look for that weasel language, right? Soft denial. They probably aren't going to get in bad faith trouble for a soft denial where they're asking for, if you have more information, let us know, that kind of thing. But I'm going to let you in on a little secret. Just y'all huddle around. I don't want everybody to hear this.
Okay.
But sometimes insurance companies deny claims because they think it will just go away.
Inside information, people, inside information. So that actually brings up my question. And this is maybe say a softball, Chris, but I really want you to give your honest opinion so people record this. You and I have been doing this for a while. We have clients. I'm a broker. I've been on the carrier side. I've been on the insured side. And especially in there are certain industries where it's very much based upon relationships. And I focus on construction, real estate, very much relationship-driven business. Should your broker be based upon a guy you went to college with, your cousin's sister that you knew or someone told you about 20 years ago? Or should your broker be based upon competence? And by that, a well-trained monkey can sell you insurance, and anybody can have a golf, get you tickets to the Rangers or take you to the golf course. But what is the function of a broker in your mind dealing with the clients and the insurance?
Wow. The broker is the gateway to the relationships with the industries. You kind of said it before a little bit. A broker is a relationship person, right?
Mm-hmm.
If you've had a recent claim or you've got a difficult risk exposure for whatever reason, and a broker can make all the difference. I'm not a broker, right? I don't sell insurance, right? I can't solve that problem for you. Although I do know some underwriters. The brokers are the ones who are the relationship people who know the individual underwriters who have an appetite for whatever garbage thing that you might have. And so the brokers are the ones who are helping you to understand holistically how everything relates together and how to market your account to the industry today. You guys are in the market every day talking to underwriters. You know what their attitudes are. 2 years ago and the year before, DE&I was a huge thing with insurers, right? They were all over it. And they want to know didn't matter what line of coverage they were trying to write you. They wanted to know about your DE&I program. Today, they don't care. They don't seem to care today very much, right? Those attitudes change. And so the broker knows exactly what the hot button issues are that the underwriters want to know about. It may not even make any sense, but the brokers know that, and they have those relationships. And so you need them. You need them. And you need a competent one, not your old high school buddy, college buddy, or your wife's cousin's best friend who needs a job. You would not believe the number of times that I've working with my client, having a great relationship with the broker. What's that meme? Where nobody. And now that the CFO comes in and says, "Oh, hey, I want you to talk to Bubba over here because it's an old buddy, or there's a relationship with the CFO. Well, whatever reason, I want you to talk to this guy." And now we're supposed to. Oh, and the next thing you know, we're doing an RFP because this kid knows somebody. And it's frustrating for me. It's frustrating for all of us, I think, to upset a good relationship when things are going really well and somebody blows that all up. It's difficult sometimes to speak truth to power, to the CEO who, you don't want to insult the relationship with whoever that person is.
Chris, this has been a fantastic conversation. We're getting short on time, so I always want to try to wrap it up, at least with a lighter question. I know I kind of want to go to your travel. So I think I know your answer to this one. So Chris, when you're not working, what are you doing?
We love to travel. We love to travel. So I wasn't putting a plug for any other insurers, but I am going to put in 2 plugs. I'm going to put plugs in for 2 different organizations or things.
Oh, please.
One is we don't have kids of our own, but we volunteered through Big Brothers Big Sisters a long time ago, right? And so we met a 10-year-old in 2008 and mentored him through Big Brothers Big Sisters program. And today he just changed jobs. He just finished 4 years at Walmart corporate in Bentonville, Arkansas. Oh, wow. And now he's moving up to take a bigger consulting job actually in Chicago. So that's a wonderful organization. big brothers, big sisters, or maybe you're a family and you have an only child. And so maybe your only child might benefit from big brothers, big sisters. And then the second is we just said goodbye to our 5th exchange student. We've hosted five international exchange students. And that is incredibly rewarding. And it's so fun. I'm a proud Texan. So it was great to be able to take our exchange student all over Texas, go down to Austin, Houston, just travel all over. So it's a huge amount of fun. If you have a little extra space in your house and a little extra space in your heart, maybe think about hosting an exchange student.
That's awesome.
Big brothers, big sisters.
All right. So last question, Chris. So you've probably been over, I've had a amount of travel in my life. I think you've probably been more places than I have. If you're someone would say, hey, what's your favorite spots? I mean, and so what are your top 3 spots? But don't try to think about not just like Paris, France. If it's Paris, whatever. What are the top 3 spots that you say like out of the blue, or like you didn't anticipate you're going to like it so much, but you really end up enjoying it?
Well, I tell you, I think the one that I'll give you a domestic one, and that's Key West, Florida.
Okay,
I love the Florida Keys. That's really before they started accepting cruise ships. It's a little bit different now. So you can't go there now. But Queensland, Australia, up in the north, the beach area of Australia. Mm-hmm. And then I would also say just rural parts of Europe. It doesn't, not a specific one. We went to a place called Troyes, Troyes, on the recommendation of one of our exchange students' fathers.
Okay.
This is a benefit of exchange students, is because then you can go visit them over there and have a free place to stay. But they pointed us out to some small, out of the way places that we absolutely fell in love with. We didn't want to leave. Wow. It's incredible.
Wow. Chris, this has been a phenomenal conversation. Thanks for your time. If someone wanted to reach out to you and get in touch with you, how are the best way to do
that? Visit us at compassriskllc.com. Be happy to chat to you.
Great. Chris, this has been phenomenal. Thanks very much for your time. I really appreciate it.
Brian, thanks for having me. I really appreciate it. This has been fun.
You bet. All right, everybody. It's been, I think, another great conversation. As we talk about risk comes in many forms, and the nature of risk has evolved over the years. And as a result, you as not just individuals, but also organizations need to think, holistically about your risk. I can tell you from personal experience, risk is, insurance is not a commodity. It's not like copper or wheat or steel. These are legal contracts written up by people who are, got degrees from fancy law firms, law schools. And so you need to have a good advocate on your side, and whether it be your internal risk management department or your broker. And if you need to, a third-party risk manager can be beneficial, because like we talk about, a little money spent now can save you a lot of heartache and issues and stress down the road. Like all things, guys, I hope you enjoyed this show. If there's a certain topic or individual you want to see on a future show, please send me a note on LinkedIn. You can also find this episode and all the other Risk On, Risk Off interviews on my YouTube channel. All the playlists, one playlist for all the episodes at one spot. Again, thank you so much for your time, everybody. Hope you enjoyed this. Stay safe out there. Until next time.